Good morning, everybody. How are you doing? It's Wednesday. Must mean we're going to do ADP. It's August 3rd, 2016. New York morning, London lunch. Another wonderful day to be a currency trader. You guys ready to get going? Well, thanks for meeting me here at Forex.Today. So welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader, been doing this a long time, and I'm here to be your guide, answer questions, push you in the right direction. My overriding goal is to help you become a better Forex trader sooner than later. And then through loyalty, you'll simply choose TradersWay to be your Forex broker. Go to TradersWay.com. Takes a minute or two, literally a minute or two, to open up a demo account. I hope you do that. We do these sessions Monday through Thursday here at Forex.Today, starting at 7:30 in the morning. Every Friday, where I'm at FXStreet.com. On FX Street, I'm also Forex Speaker of the Year, which ain't bad because they have a lot of really good speakers. So it's quite an honor, and I thank you for your loyalty. This Friday is also non-farm payrolls. So I will be doing that event. It's free for everyone. And 600 or 700 of my closest friends will be there. Then I'll quickly review my paper because it's my last day to submit my my written paper to Harvard. So I'll submit that, and then I'll jump on a plane and fly to South Africa. But besides that, my day is wide open. Not bad. So Friday is going to be a beast. Today is looking good, though, however. Another dumb prediction very often leads to a scalp. How do you feel about that? So more news out of Japan and still more disappointment. The Japanese are very conservative, and they're proving themselves to be conservative again. Even when the house is on fire, they're saving water. Jenna. Hey, did you find out what kind of booze Ryan drinks? Pretty sure I'm just gonna buy some fabulous bourbon from this part of the world. Yeah, don't worry about it. Thank you. The state planner NDRC, the big planning department for the Chinese government, they're recommending they cut interest rates and RRR. Nah, don't worry about it, Jenna. A gift is a gift. I just want to make sure if I gave him a bottle of alcohol, he's like, dude, my parents are alcoholics and they threw themselves off of a bridge when I was a child, and I can't look at a bottle of bourbon. How dare you buy that for me? I'm like, all right, give it back. So anyways, cutting interest rates, that's like a sniper rifle. Cutting the RRR is like a bazooka. And it's been a while since we talked about the reserve requirement ratio. And does anyone remember the formula? The money multiplier? What is the money multiplier? 1 over R plus E, I think. And it's been a while since I've done it. Let me get my drawing tool. Yeah. You guys remember? Uh-huh. So you go, the formula for the, let's do the money multiplier. You guys are, you guys are up to date with your central banking stuff. So the money multiplier is 1 over R plus E. Right? You guys following me? Which is equal to 1 over, what's R in the United States? 0.1 plus E. Okay, do you guys remember the difference between R and E? R is the reserve requirement ratio, otherwise known as the RRR. These are the amount the amount of deposits. If you're a bank like Deutsche Bank in Germany or Bank of America in the United States, if you're Bank of America, you have deposits from clients. Every time a client makes a deposit, you are required by law to have a certain amount of those deposits parked at the Fed. And all the other stuff you can lend out. That's what banks do, right? So the reserve requirement ratio, the amount of the deposits that are required to be held at the Fed is 10%, otherwise known as, 0.1, right? Excess reserves, it has to do with the management of the company. So like the CEO of Bank of America will say, well, we're required to have 1% or 0.1, which is 10%. We're required to have 10%. It's supposed to be a 10 for some reason. We're supposed to have 10% of deposits held at the Fed. But, I'm looking at the books here, and I'm looking at the money flow and the trend in these things, and I think we should have an extra 2% parked at the Fed. It's not required, but as a manager, I think that's proper. So in that case, Bank of America, required reserves plus excess reserves, the amount of reserves parked at the Fed, they're not required by law. So then for Bank of America might have 12%, right? Why is this important? Well, all that other money gets loaned out. Right? Okay, so $1,000, 900 goes to the Fed. I'm sorry, 100 goes to the Fed. Oops, I already messed it up, the first shot. So 900 gets loaned out. And eventually that gets put into a bank account, right? So what happens? 90 is parked at the Fed, and 810 is loaned out from bank. So you got Bank A. Bank A That gets loaned out and they spend it and gets deposited at Bank B. That gets spent and deposited at Bank C. So Bank C has to put 10% of that at the Fed, you know. So let's just round everything, right? So that's, what, 720? Oh man, I got to do my math now. It parked at Bank D, and then Bank D has to deposit $72, and then, you know, blah, 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 blah. And you continue the cycle down, all the way down, and so now you're at Bank Z, and, you know, I don't know what's left, but like $2.50 is parked at the Fed, you know, and whatever is loaned out. What is it? What happens? Well, the initial deposit of $1,000, right, when put against the power of the money multiplier, which is 1 over R plus E, gets turned into $10,000 into deposits. So what happened? Through the magic of commercial banking and retail banking and the money multiplier, which is set and influenced by the Fed, $1,000 got turned into $10,000. And somebody told you the Fed had a printing press. That's not true. Was a printing press involved in any of that? They turned $1,000 into $10,000. Did they actually print $9,000? So the next time you hear the Fed has printing presses, you should laugh because they don't have printing presses. Thank you. Fractional reserve banking system. Thank you, Sally Pop. High five. Boom. So who has printing presses then? The Treasury. Venezuela. Yeah, the Treasury. So anyway, so when China says we are going to lower the reserve requirement ratio, let's just pretend it's the Fed, okay? Let's say the Fed just announces this. The Fed slashes the reserve requirement ratio from 10% to 9%. Is that a big deal? Why is it a big deal? Because it's exponential in the sense that it magnifies the amount of money that gets created in the economy. And it has a huge impact if you do the math. So it comes down to, do we need, right? So what is the math? All right, well, let's turn this off. What is the math? I got to get a stupid calculator out. So let's say excess reserves are zero. Okay, the bank loans out 100% that it's legally allowed to, because that's in its best interest. Fine. Right? So what is it? $1,000 times 1 over 0.1, right? $10,000. So let's change it now. $1,000 deposit into the banking system times 1 over, and now what do I put? 1 over what? What's the new RRR in this example? 0.9. So we're comparing now if the Fed at the current reserve requirement ratio in the United States is 0.10, and you do the money multiplier based on that, every time $1,000 gets deposited in the banking system in the United States, eventually it gets turned into $10,000. So if the Fed made a small move, let's say, and cut the reserve requirement ratio from 10% to 9%, what impact will it have in the economy? All right, well, in this case, we're saying, all right, $1,000 gets deposited into the U.S. banking system times 1 over R plus E is 0, so 1 over the reserve requirement ratio equals 1,000. So, wait, how did that work out? 1,000 times 1 over 0.9 equals. Why did I mess that up? All right, hang on. 1,000. It's hard to talk and speak at the same time, right? 1.09. No, I screwed that up too. Hang on, I can't think and do this. $1,000 deposit times 1 over 0.09 equals. There we go. All right, so in the first situation, $1,000 at a reserve requirement ratio, or RRR, of 10%, $1,000 deposit was turned into $10,000. Changing it to 9% adds an extra $1,111, which is more than a 10%, right? It's an 11% increase. A 1% decrease is an 11% increase. You see the impact, guys? So right? So if the Fed, or in this case, if China cuts the reserve requirement ratio, it doesn't sound like much in the news, but it is a big deal. When was the last time the United States cut its reserve requirement ratio? Damn it, look at you. Absolutely, right off the bat, 1992. You probably took the fundies course. Uh-huh. How many times did China cut RRR in 1990? What was 1990? 2015, let's say. Let's see if Google knows. I don't think it's gonna. It's gonna take me too long to figure out. Anyways, China many times per year cuts its RRR, and yet the United States hasn't even cut in decades. So it's a big deal, is all I'm trying to say. So everybody up to speed on basic central banking policy? And in this case, it's not policy, it's management. It's pretty cool stuff, right? So the major planner for the Chinese government recommends cutting interest rates and the RRR, which should increase money supply and devalue the currency. As you can see, you cut the RRR just by 1%, and you get a 11% increase in money supply. Right? So it's more than a magnitude difference. Rumor has it that New Zealand needs to cut interest rates further. So Kiwi coming down. How do we get into these discussions sometimes? If I had only planned it out. All right. German PMI, 54, fine. UK PMI, 47, not fine. It's the first contraction in 43 months and the lowest reading since March 2009. Another way of saying it is UK PMI sucks. World hurt. Fifth time in the past year that okay, cool. Oh, I see, Charles. Charles, you're right. You're right. My bad. Yeah, you're right. Yep. Yep, you're right. But it's still an increase in money supply, no matter what. But you're right. Thanks for thank you. I don't mind admitting I'm wrong. Like I said, if I'd only planned it out, maybe I wouldn't babble over myself. But, right, where else do you get to talk about the money multiplier in regards to the Chinese discussion of cutting reserve requirement ratios? I think as a currency trader, it's kind of nice to have a community like this, right? Yeah, I love it. I love you. So Abe and they're all trying to make things sound good, but it's not. So we'll find out what's going to happen in the world. If you follow Japanese politics, they're appearing on TV everywhere they possibly can. So they're doing everything except enough. I posted earlier, mortgage applications down quite a bit, man. Refis are down quite a bit. Average 30-year mortgage in the United States of America, 3.67%. So it's one of these things where, I don't know, when the 10-year T-note is at 1.5, you're almost like required by law to refinance. At least, it's just like, wow. 1.5, it's just hard to believe. And then you think, well, half the world is well below 1. Not half the world, maybe most of the world is below 1%. So maybe 1.5% is not a bottom, but at some point you got to get serious about thinking about taking on long-term debt because it's great at 1%. How could you not be able to borrow money at 1% and make a profit on it? Sally says, well, maybe we're all going to zero. Maybe, but if someone gave you $100 million and said, well, pay me back, 1% interest, could you make more than 1%, 1.5% on with the money you borrowed? I mean, so like, that's when you go and you say, well, okay, 1.5%, how much will you give me? And when they tell you that number, can you say, can I have more? Right? Like, even if you don't want it or need it, you should borrow it and find something to do with it, right? Right? My goodness. So it's just very, 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 very interesting. So like the 10-year or the 30-year mortgage, let's just say 3.5%, or let's call it even 4%. Well, but 4% is too high. All right, 3 2/3, right, is a 30-year mortgage. Can you make 5% a year? I think my house is going up like 10% a year. Something like that, right? It's just like then you should borrow $100 million. Just as long as you got the income to pay the interest payments. I mean, if you have to carry 3.7% mortgage, but your house is going up 10% a year. But see, houses though, like, let's not talk about real estate, but houses you got to maintain and insure, and then you know, a friend of mine, he's bought, you know, 5 or 6 or 7 houses recently, and you know, every one of them had to be updated, and you know, he's got workers here and roofers there and plumbers there, and just, you know, it's a ton of work, and then you got to rent all these suckers out, and I'm like, too much work. So I told my kids, just buy a skyscraper with 100 apartments in it, and there's no lawns, there's no roofs that have to be fixed. Just buy a whole skyscraper, just borrow more money. Right, but there's got to be something you could do with it. So for example, you could borrow money, and I think Ford Motors is paying like 9.7% on a bond. So if you were a bank, you were a commercial bank, how much are you paying your depositors? They deposit $1 million in your bank. How much are you paying your depositors? 0.02, right? And then you take their money and you say, thank you very much. Thank you for the $1 million. Here's your $3 in interest on your million. Oh, by the way, there's a $5 surcharge. So you owe me $2 for your million, right? And then what do? You give it to Ford. And you lend it to Ford Motor Company, who's going to pay you 9.7% a year. And you're like, oh, thank you, depositor. Thank you for your $1 million. Give it to Ford Motor Company and just pray they don't go bankrupt. Isn't that interesting? And then I'm done. I'm like, all right, I just lent it to Ford Motor Company for 7 years at 10%. I'll get paid $700,000 in revenue over that period, and I'm using my client's money. Why wouldn't you start a bank, Sally? Just start a bank. That's what banks do. Okay. All right. So whatever. Blah 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 blah. Oh, ISM services at 10. Whoop whoop. It's going to be a good one. ISM services is a doozy. Sally, do you remember when like a mortgage was what, 6%? Well, okay, yeah, but that's crazy talk now, right? But let's say it's 6 or 7%. You know, if you're a bank now, depositors have come in, you got $1 billion worth of deposits, 10% gets parked at the Fed, you got 90% to play with, you park some excess reserves in there in case something, there's a big demand for cash, for whatever reason, but so you park some extra, so you got your R and your E over at the Fed. Now you got this pool of cash, which could be like $800 million, right? And so now you lend out $800 million, so you're short cash and you're long mortgages. And at that 6 or 7%, by the time people are done paying their mortgage over the course of 30 years, you've like more than doubled your money. Does anyone have a financial calculator in front of them? You could bust it out. I mean, these mortgage lenders that were lending and holding for the whole period, right? It was good money. What's 6% on $1 million compounded over 30 years? It's a lot. of profit, guys. It's like 140% profit or something. So yeah, on $800 million of other people's money? Yeah, sounds pretty good. So yeah, why don't you start a bank? So anyway, so yeah, so we got the, it's Wednesday, so we got oil inventories, of course. ISM services, another big one. What is that? What's, explain more, John. You have a mortgage at 8.75, or you earn that on lending other people money, or what? Yeah. Well, that's good money, right? Holy smokes. Yeah. All right. So I have this up here. I thought you might like a visual representation for scalping. Can you see what I'm doing here? Short term time frames. Not using moving averages. So what am I looking at? Hello. It's me. I'm in California dreaming. Right? You see what I'm doing? What I'm looking at is price action. And the key thing with price action is when you get a higher high, you're going to look for a higher low. Okay? You can see at some point, this is just a 1 minute chart, but you can see down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, up, buy, right? Right? And it goes through all these different cycles. And when it makes a lower low, you should take the previous zone here, move that old support across, and it may become resistance in the future. And this old high, right, made a new low, great. Did this high go higher than that high? No, so you stay bearish. Then all of a sudden, it didn't make the lower low. So the one thing about price action is every lower high is supposed to make a lower low. Right? Break through the old support, which is this area. Okay, very, very easy stuff. So you will sell a retracement back to that area. Great. Makes a new lower low. Great, everything's nice. Now ideally you stay below that area. Notice how high it came back. Almost a double top. That's a huge red flag. But it does make a higher high, but it doesn't make a lower low either. Okay? And that was, you could probably guess that something like that would happen based on how far back this move was, because it should have stayed up, roughly about here. You're not supposed to do a 786, right? So that's followed by a higher high, which immediately you yell what? Hammock! Hammock! Uh-huh. Isn't that beautiful? Doesn't that just make you feel all googly-eyed? Boom. Comes across. Consolidate, consolidate, consolidate. And then hopefully it breaks out, right? Hello? It's me. All right. And so that's when I'm eyeballing when I'm doing just short-term time frames, or otherwise known as price action, right? By the way, don't let me forget about ADP, okay? I get sidetracked. It comes out at 8:15. It's a weird time for news. So, okay. Now, a couple of things here. This lower time frame, or this lower Stokes, what it's looking at, we're on a 1 minute chart. This lower Stokes is measuring the 1 minute, the 5 minute, and the 15 minute stochastics. Yeah. Isn't that neat? You see these dark zones? All 3 time frames are oversold. All 3 time frames are overbought. All 3 time frames are oversold. All 3 time frames are overbought. All 3 time frames are overbought. Neat, huh? Maybe it's important. We don't really know. What do you think? Is it plausibly important? Do they represent possible turning points in the market? Okay, it's not perfect, but it is suggesting, right? It is suggesting to get ready for different time frames. Now check this out. You watching? Don't miss it. I'm going to change the chart to a 5 minute. Watch this. Boom. Okay. Oh, by the way, look, you can tell what I was doing yesterday. And there's my buy zones. Anyways, going back to here, now it's measuring the 5 minute, the 15 minute, and the 30 minute stochastics. It changes automatically. Go to a 15 minute chart. It's looking at the 15, the 30, and the 1 hour. Oh, snap. So this says get ready to sell. Right? This says get ready to buy. This says get ready to sell. This says get ready to buy. Yeah, but besides that, this says get ready to buy. Now you throw that in with some price action, meaning, you know, this, and then if you already had a bias of whether you wanted to buy or sell, this should be helpful, shouldn't it? The funny thing is, these colors might be helpful, but it doesn't change anything. You should have been doing this the whole time anyways, and you don't need all of this is nonsense. It's all really basic. But the colors are pretty. Okay. Again, if you are selling into this, you're still losing money. Right? You see, that's the point I'm trying to make. You know, and if you're looking at this to give you, to tell you what to do, once again, you're not using your charts properly, or you're not even trading currencies properly. You're supposed to make your decisions on a lot of these things before they happen. So, is the Fed going to raise interest rates in September? Yes or no? If you said no, Euro USD should go up. That's it. Okay, so, you know, and we've talked about it, I don't know, 20,000 million billion thousand times, right? So if it's going to go up, then you're simply doing things like buying dips, right? You don't need a fancy indicator to tell you these things, do you? I think what will be interesting is if these ribbons roll over, right? If this goes below these areas, but I'm not paying attention to the ribbon as much as I'm paying attention to the things I drew yesterday. You can see the lines I've drawn yesterday, and these are still my concerns today. Turns out, if we go back into the smaller time frame, this top and this bottom are where we are now. And that's where the choppiness is coming from on the 1 minute chart. And there's a reasonable chance that today goes like this, right? If the news is horrible, then it'll probably do this. And that's called a trade plan. And the next area is going to be back down into here, right? So the ribbons are not telling me anything, or the rainbow, whatever, you know, but they're pretty colors to have. Switching to the 1 hour, this lower Stokes now is a 1 hour Stokes, a 4 hour Stokes, and a daily Stokes. This is oversold right here on 3 different time frames. Overbought, overbought, overbought on 3 time frames. Okay. Okay, we're about 3 minutes now to ADP, another dumb prediction. So again, looking back on this, it doesn't look like it, but as we've identified, going back a week or 2 ago, this area is important support, and this area is important resistance, and we already know that. All of this should already be pre-planned. The question is, do you want to buy it down here, or do you want to sell it up here? That's the only real question. Okay, and if you were looking for a reversal in here because it's support going back a week or 2, then this hammock should be fairly straightforward, right? Not because of the ribbon, but because you're a bull based on your technical analysis, and this is where you would expected it to reverse, and then you got a reversal pattern, which then puts you into a trade plan, which automatically gets you ready for a pullback into the role reversal zone so that you can 1, 2, 3 it. That's where your success comes from. Okay. Okay, ADP coming out.
This is a 24-hour live broadcast test channel from the Trade the News Broadcast Network. If you are hearing this message, your sound card and network configuration are working properly, and you are now ready to listen to our other voice channel.
For the release of the ADP employment, again, the consensus is for 170,000, 170,000 is the consensus. ADP employment change comes in 179,000, slight beat of expectations and an improvement from a month ago.
179, whoop, whoop.
Higher to 176 from 172. Revision higher in the back month. Small businesses this month grew by 61,000. Medium businesses grew by 68,000. Construction saw a decline again of 6,000, while manufacturing flipped back to positive 4,000 growth in manufacturing jobs. Mark Zandi saying job growth remains strong, but it's moderating as the economy approaches full employment and businesses are having a more difficult time filling open positions, which are near record highs. Saying the nation's biggest economic problem will soon be the lack of available workers.
Little dollar reaction in the slight beat there, the ADP data.
All right, sorry about that. What should we do now? Let's look at the stock market. Adam, it's not up to me. It's up to the central banks, but yeah, hopefully, right? Hello, it's me. I'm in Johannesburg dreaming about the way we used to be. We were young and free. All right. So here's the interesting thing about the S&P. Okay, this is the projected low for the week. Kind of makes me think that S&P 500 traders use weekly pivot points. What do you think? Here's the support. So a bear is going to sell there. And if you were a bull, this is where you would buy based on pivot point theory. And it's a little dangerous because it's not a buy zone. It's just where the bears would take profit. Now, you know, do you buy it simply because it's here? No, I think that's kind of dangerous, but I could see what someone might be doing if they were scalping it. If you were down on a 1 minute chart when price is touching and then you watch this thing skyrocket, then maybe. But what do you call a double bottom at support? A potential opportunity to go long, right? If you're already a bull. Now, the more conservative plan is to have it go up to there and buy the pullback, but to each his own. Look at my scalp. Oh, snap. You don't mind if I make money while I coach, do you? And what do you think about selling at resistance? Right. Do you see why we draw these things ahead of time? So. Take a look at oil. Everyone was super excited yesterday. Good for them. Did you guys hear the news? They're all freaking out. Oh my God. It's the end of the world. Uh-huh. So here we are at 40 bucks. Now what, right? What we talked about yesterday is someone's going to buy it because it's $40, not because it makes any fundamental sense. Right? Not that it makes any fundamental sense, but someone will buy it at 40. Right? You guys remember that conversation? It may go up, maybe only for a little while, but it will go up because it's 40. Yeah, so. So we're at the daily support right around this 39.60, but so whatever. I think the more interesting thing is that when it was way down here at 27, we planned for it to go to 50, and then once it went to 50, it would come back down. But that's what we said in January, and I think that's much more interesting than, the media freaking out yesterday. Like, really? I mean, it's laughable, isn't it, in context? Then January we would say, oh, it's going to go up. And then it'll hit in here, and then it'll come down. And do you guys remember what day peak oil occurs? I taught you this last year, and I taught you this the year before, and the year before that. No, not July. Based on 50 years worth of data, when is peak oil as far as inventories? June 1st, which is here. Right? So it's laughable now, like that yesterday the media freaks out. Oh, it's at $40. Oh my God. Like, you know, what were they talking about here? That it was going to go down to $10 a barrel. Do you guys remember that? It's going to go down to $10 a barrel. Well, once it does this, what do you yell? Hammock! Right? Isn't it nice to be smart money? Just let everyone else freak out. And then very, very, very casually say, when it hits to 50, it'll probably fall back down to 40 or 35. I have it marked here. You see this, guys? Marked here from December of 2015. Okay, so it'll probably come over here to about $37, and then what? It's going to go back up. You know, and the media just, it's not even the media, it's like people. They freak out. It must be very scary not to know it's what's happening. So what are they going to tell you? Oh, it's gonna go back to $25 a barrel. You know, maybe. But based on my analysis, this is where it's going to get interesting. Okay? Right? According to my research, that's where it's going to get interesting again. Right? And then what? Right? Doesn't that seem to be textbook analysis? That this blue line was important here. It was important here. I include this as basically the same thing. Then again here, it could possibly be important again. We're looking at 37 or 38 is the range. We hit, what was it yesterday, 39.50? Head and shoulders, yeah, you could, I guess, yeah, if that's your thing. If that's your bag, baby, sure. Yeah, I guess, yeah, if that's how you trade, sure. That's your thing. Do your thing, boy. So if I borrow $1 million, put it into a European bank, can I make more than 3% a year on investing on a European bank stock that's down 85% from its 10-year high? Can you imagine? Because the cool thing about that is if you buy something that used to be $100 and you're buying it for $3 and you plan on holding it for as long as possible, and I mean decades, is it possible it goes back to $100 again? But then you borrowed $1 million, so that means you're gonna turn $1 million into $50 million. Well, what else are you going to do with your life? Well, I mean, you'd be done. You're like, well, I borrowed $1 million. I bought some stock really cheap. It was flat for a year or two, and then it just went up. Because apparently banks still make money, and it just went up. And then 10 years later, we got out of our global financial crisis, and it started going up much more significantly because they're making better carries. And I don't work no more. Right? Can you imagine being at a party? Hey, so what do you do? Oh, I borrowed some money and I bought a bank stock like 17 years ago and I haven't worked since. So the bank makes its money and pays its employees and pays for all its buildings and stuff and its shareholders get stock appreciation, and yeah, so I bought it and I stopped working. Right? So I bought that stock and I just stopped working. But that was 17 years ago. Now the stock's going up fast. Yeah, and then are they paying a dividend on top of it, right? Yeah. Yeah, Sally would rather work. Sally wants to do a good, honest living laying bricks. Credit Suisse went long Kiwi dollar off the news. Stupid Credit Suisse. Well, let's see what they're doing. Let's spy on Credit Suisse. I got too much going on there. All right, so I'm on the wrong. So here's what Credit Suisse did. It's me versus Credit Suisse. And it feels better to me, right, at the moment. Let's do this to a fiver. All right, so I've moved my stop. But anyways, Credit Suisse, where are you? Credit Suisse longed it at 71.70. All right, so let's mark this area here. Oh man, so it's me against Credit Suisse. So they're there. They're going for 73.20. Their stop's at 71.30. Hello? 71.30. It's me. I'm Credit Suisse and I'm trading the Kiwi dollar. All right. So that's their stop. Let's expand this. All right. Don't judge me by my trade. All right. So Credit Suisse just bought this. Okay. They bought that and their stops right here. Seems like their daily is probably a little different than mine. Seems like they're playing the S2, or they're actually dropping it right below the S2 because they're hoping even if it comes way down here that the S2 holds, right? So what is the logic? Credit Suisse said they're going to buy this at support, right? Here, let's do this a little better. Okay, Credit Suisse says let's buy this at support. Okay, would you agree that that's support? Another way of describing it is daily S1. Okay, they bought it at daily S1 at, I would call this more like consolidation, right? So if it rolls over, I'm going to get paid. But they bought it at daily S1, which they consider support. They put their stop just below daily S2. Wait, no, their stop's at 30. Man, sorry, I'm getting all messed up on my trade. Their stop is 71.30. 70, and this is 71.20. All right, so their stop, it's not that good. All right, so this is it. This is their stop. That's right. So their stop is just above daily S2. That doesn't make any sense, does it? So their calculation must be a little different. So they just bought here. Stop is here. And their target is 73.20. Are they playing weeklies? Let's take a look at it that way. I'm sorry I'm so messed up. Got a lot going on. Okay, 73, what is it? 71.30, 71.34. All right, yeah, all right. So they have it just below the weekly central. Messing around with my drawing tool. All right, so they put it just below there. Their entry is right about here, which is a daily S1. Okay, cool. They're hoping this goes way up here. This is a pretty shallow high, and this is pretty deep low. So I guess only time will tell. Yeah, Swiss pivots. But it's good to know, right? Do you like spying on these guys? All right, they've just bought the pound dollar, Credit Suisse again. They bought it at 132.25. No, that can't be right. Oh, they threw down a limit. All right, well, we can still look at it. It's just a limit order. So they want to buy it at 132.25. 132.50, 132. All right, so they're buying it just above the weekly central. So we know right away on these two trades that Credit Suisse has integrated weekly pivot points, right? Can we conclude that? That on the previous trade, their stop was just below the weekly central pivot. In this case, their limit ordered to buy the trade, to get in the trade, is just above the weekly central. So they want it to come down to the weekly central and bounce up. Okay? No, nobody is, Nikki. But we can at least walk away saying we know Credit Suisse uses weekly central pivots. Maybe some of the other professional banks use weekly pivots as well, right? So to take it one step further, right? Because my professor always says, so why? Keep at. All right. Well, why does that matter? Maybe you should consider using weekly pivot points in your analysis too, because I like them, but who cares about me? And we think some commercial banks and other institutional investors use them, and it seems that we have proof that suggests, or evidence that suggests, that at least Credit Suisse uses weekly pivots. And we can extrapolate, well then they're probably not the only ones, but not everybody, but we know this team of currency traders does use weekly central, right? To say it a different way, if you would like to work for Credit Suisse on their foreign exchange trading desk, you should wow them with your knowledge of weekly pivot points. Right? So you're welcome. All right, so they're buying it here. Their target is 134.45, 134.45, but that's where we are now. 134. So they think it's going to do this. It's going to come down according to Credit Suisse and then go back up, in which they'll take profit. Their stop is at 31.48. 31.48. Their entry is 32.25. Their stop 31.50. 31.48. There you go. And that probably has to do with the daily pivot, right? Of course. Yes, Hans. This is not their hedging desk. It's not their market making desk either. This is their foreign exchange speculative team. Yeah, they're in it for money. Yep. Hello, it's me. I guess we're done for the day. Scratch, scratch, scratch. Time goes by when we're hanging out, man. It goes by so fast. Are you watching USD yen? Is it going to bottom out around 100? I mean, these are the questions you should be asking, right? Is the stock market going to go up off of the reversal pivots today? That's another question you should be asking. If this goes up, the ends go up, which means a double bottom at 101 might be interesting. Second day, Martin? Loving it? Right on. Where'd you find out about us? Yeah, well, I've been doing this well over 10 years now. So you're welcome to hang. Yeah, right on. I guess that's why we do them, eh? Right on, Hans. I appreciate that, guys. Oh, yeah, I do. I'm tired, man. I work hard, so it's nice to know from time to time that it matters. So thank you for your loyalty. And you know what? I really do wish the best for you. I hope you understand that I really want you to succeed. And I can't wait for you to prove me right. That you will. So Hans says he's listened to me on and off for a few years. Has my methodology changed? How long have you guys hung out with me? How many years for those who have been around a while? How many years are we talking, guys? Kenny, 2 years. Hans, 2 or 3 years. Dan, a half a year. Fred, 4 to 6 months. Bobby, 8. 8 what? Susanna, on and off, maybe 6. 6 what? Years, huh? Yep, the beast, right on. 6 or 7 years. EdFX. Ed, what was your hotcom name? It was real 8 years. Just amazing, guys. Beasta, yeah, 8 years. It's just really cool. Yeah, forgot. Bobby, it says 8 years, so that you must be a hotcomer as well. Mr. T, just 2 weeks. Ed still got the book. Yeah. Is that Bobby Cox? No, different Bobby. Lots of Bobbies. Eight years, huh? Just amazing. For those few that are here for Ben or more than 5 years, for the guys that have been around 5 or 6 or 7 or 8 years, how much has my trading changed in your opinion? Well, some things have changed a bit. Back, for Beasta and Bobby, and, those who have been around almost a decade, we would have spent a lot of time on the Euro USD. We would have spent a lot of time on a 15-minute chart. And we probably only covered daily pivots. But back then, Forex was like a strange, exotic beast, right? And people came in to the room and they had never seen a chart before. Mike, it's been 7 years? Right on, man. You guys are awesome. Right? And so like 7 or 8 years ago, a chart was new. Moving averages were common, but like pivot points, no one had even heard of a pivot point. You couldn't even get them. I had to have mine custom made. So, but I believe the general gist of the methodology of conservative, repeatable trades, patience and discipline, and buying at support, selling at resistance, and using moving averages and oscillators to identify the quality of those setups. Really, I mean, a 5A cross to me is the same as a 5A cross 10 years ago. And I don't believe I've added layers and layers of selling opportunities, right? How many trading strategies have I sold you? Like, I'm gonna sell you this my new awesome trading strategy, right? So yeah, so and that's cool. I hope you appreciate that. Now, we've had some really good times over those 8 years. It started out with just me, then the success got really big, so I hired a bunch of people, and spent a lot of money and lost a lot of money, but it was great. And here we are, full circle, 10, 11, 12 years later, and it's small and intimate again. And I'm still very happy working with you guys. Well, technically, Ed, I sold the book to Wiley Publishing, so it's not my book. So you bought it from Wiley. I didn't sell you a book. It's not even legally my book. I only wrote it. So anyways, I know you've proven your loyalty to me, and I hope I hope that's because I've earned your loyalty by being loyal to you. So I love you, man. No, Sally, the way it works is you write a book and you sell it to a publisher, and then the publisher sells it and then markets it and does all those things. Yeah, Boyke. Yeah, whatever happened to Boyke, yeah. Oh, boot camp, I don't know. There's been a lot of people that want FX Bootcamp to come back, but I'm too busy. What can I say? Maybe I should start a bank. Wink, wink, nudge, nudge. So anyways, I gotta go. It's finals week at Harvard. I'm busy. Oh! I got my first paper back from my professor. There's 3 in this class. The second one's being graded right now, but I got my first paper back. Not 100%, but a 98.5% will have to do. So, shoot. Oh, dang it. I'll have to work harder next time. But if you saw how hard I worked, though, you'd be mad that it wasn't better. So anyways, thank you. So I'm hoping the next one's going to be good, and I got a lot to do on this third one, and it's got to be done in the next 2 days. Like I said, then I got NFB, and then I got to jump on an airplane. Could travel the other side of the world, but whatever. But, it's only Harvard. How hard could it be? So anyways, Peace on earth. May the pips be with you. May your profits be above average. And I'll see you again tomorrow. And the next day.